Michael Carnevale is branch manager and financial advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5 Cent Savings Bank, and subject to risk, may lose value. Webster 5 Cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnevale and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice.
Well, hi everybody, it's another Conversations With, and I'm Dick Vaughn, and with me today is, as you just heard, is Mike Carnevale. Well, Mike, here we are in January.
Right.
You know, 2020's gone, and now we're starting off a new year, and we're looking good.
Oh, we just finished another month, the first month of the year, and it's been like, I don't know how many of the past umpteen months, it was another good month.
Oh, yeah?
Yeah, it's amazing.
Yeah.
You know, normally January is, at least historically, sort of in the middle of the 12 months, but what happened in January? The Dow went over 31,000 for the first time. Looks like it's going to finish up for the month, currently up 1%. That isn't bad.
No?
You know?
Well, it's a good start.
It is.
You know, and of course there was a lot of the naysayers when because we had the new president.
That's exactly
oh, what's
right.
going to happen now?
Oh, yeah. Oh, yeah, it's going to drop big.
Yeah.
Didn't. It didn't even drop a little. I mean, it just continued to
go.
Make progress every day, every week. Interest rates went up a little bit. The 30-year Treasury now is at 1.83% versus a month ago it was at 1.67%. So, you know, that's something you got to keep an eye on. But, you know, as far as stock prices, it still seems to be the only game out there.
It's the only viability. You know, I mean, you know, I was telling somebody about we had the big payoffs in the Mega Millions and the Powerball, and I was telling somebody, I said, let me tell you, there's two things. If you don't buy a ticket, you can't win. And if you buy a ticket, you can't win.
That's true.
And he laughed.
Yeah.
He said, the fellow, I was telling him, he said, oh, good luck. I said, luck's got nothing to do with it. I said, if I don't buy a ticket at all, I have no chance of winning.
Right.
I said, but if I buy a ticket, I probably won't win.
Right. Right. 99.9999. I don't know how many nines it goes out that you're going to lose.
Yeah.
Yeah. Yeah. No question. But it was a good month. You know. Last month we talked about how the technical indicators indicated that, you know, prices are high, no question about it. They continue to be high. Not much change there. You know, that 200-day moving average that we like to look at a month ago is at 87%, meaning 87% of the stocks are above their average price over the past 200 days. It dropped 1 percentage point to 86%, but anything over 70 is considered, you know, higher risk. The other one is the volatility index. A month ago it was 23, which was considered in the normal range. It did bump up this month to 28, which is good. The higher the number, the better. You know, more volatility is better because that, you know, can kind of hold back people from buying, which can keep prices, you know, reasonable. And then the last one we look at is the stochastic oscillator, which measures short-term price movement in stocks. 100 is the worst it could possibly be. A month ago it was 98. Today it's 96. But anything over 80 is historically prices are overvalued. So as with the month of December, January still showed things were a little on the high side, but, you know, still nothing out there that would, you know, would say we're going to get a big drop, you know, based on what's going on in the economy.
Right. So, you know, things are moving along. I mean,
they are.
It just, I mean, you know, you and I would go back to when it was 6,600.
Oh.
And I mean, it's
4.5, 5 times that now. If you can believe it.
Yeah.
Yeah.
And it's just keeps clicking along.
Well, last year, we had a pandemic, the shutdowns, the viruses, the election, yet the Dow was up 7%. And that was the worst of the indexes. The
Yeah.
Nasdaq and the Standard & Poor's did much better than that.
Yeah.
So, it's hard to say how not being in the stock market was the wrong thing to do.
Yeah. Well, I mean, I was bemused yesterday with these people these day traders that came running in to
yeah.
something about GameStop or
Oh,
something.
yes.
And
Yeah.
drove the stock way up, to have some fun with the hedge fund guys.
Yes. Yeah.
Who sell short.
Yeah. Yeah. Well, that's a whole thing where obviously it's the power of social media,
Oh, yeah.
which can be used for obviously a lot of good things, but this is an indication of how it can be used, I think, for bad things.
Oh yeah. Well, I think one of the great challenges now is I saw a thing today. A fellow was on and saying you really shouldn't be buying stuff online.
Yeah.
Because he said there's so much information, and they know everything you're doing. Mm-hmm. And you look at something, and the next 4 days they keep sending you.
Of course. Yeah.
Every once in a while I'll check Car Gurus to see what's out there, see if there's any deals around. Mm-hmm. And then the minute I do that, for the next week,
Right.
every time I open my computer,
Yep.
I get a thing about cars.
Yep.
Because they knew I'm looking.
No, you're looking. Yeah. Yeah. There's no such thing as privacy.
No, it's gone.
Even if they say they have it,
Yeah.
if it's electronic, it can be it can be saved and kept
I mean,
forever.
this year alone, I think I changed 3 different credit cards
Okay.
because somebody got them,
Yep.
and one of them was, it was really surprising. I had some work done, and when I was there, the card didn't clear. It wasn't the card; it was her equipment. Mm-hmm. It wasn't working. Mm-hmm. So she said, "Well, I'll just write the number down, and then it'll go through." I said, "Okay, great." Never thought another thing about it. Well, that month I got that bill, and there's 4 things on there that I never bought.
Yeah.
So she used the number,
Yeah.
or somebody in her office
Correct.
saw it written down,
Yeah.
took it, and used it.
Yeah.
So I called the company. They sent me a new card with different number. Mm-hmm. And I'm talking to one of the guys from the fraud department, and he says, Mr. Bond, he said, you ought to think about how many you got? I said, I probably have 8 or 9 credit cards. He said, and I said, I can't get rid of them because it affects my credit.
Right.
And right now I'm sitting on 838, and I said, if I dump one of
Yeah.
them, it lowers.
Right.
I said, so I can't. And he says, what I would do if I were you, because I've done it myself, about every 2 years or every 3 years, I call up, cancel that one, and get a new card with a new number. Mm-hmm. He said, just to do it. He said, because he said, you can't believe what goes on here.
Yeah,
And he says, I'm dealing with you now. I got 12 people I got to call back.
Yeah.
Who had the same problem you had.
Yeah. Yeah.
And he said, the fraud is awesome.
Oh yeah. Oh
He
yeah.
said, it's unbelievable.
Yeah.
And he said, where a lot of it is going on, he said, well, how do they do it? He said, Mr. Bond, do you ever go to a restaurant? Yeah. And what do you do at the end of the night? You hand somebody your credit card, mm-hmm. and he leaves.
Right.
And he comes back and brings you the tape and the credit card. Now, all he's got to do when he goes over there, and we've done this investigation 40 times, that kid probably that night made $100. Well, he had 20 tables. And what he does, he writes down all the information on a piece of paper. And he walks out, and there's a guy that will give him $100 a name.
Yeah. Sure.
And he gives the guy the paper. Mm-hmm. He makes it fast $500 or $600, more than he made that night working.
Right.
And he said, that's what's going on.
Yeah.
He said, you gave him the card. He's got it. Mm-hmm. I said, write down what's on it.
Yep.
I said, wow.
Yeah. When a card goes out of your sight.
Yep. He says, you don't think about that.
No.
He says, but that's the latest thing is the fraud in restaurants.
Yeah.
He said the kids are selling the numbers.
Yeah.
He says, especially in these high tourist places like Cape Cod in the summer,
Oh, sure.
where there's people from all over the country there. And he said, any of these high volume tourist places, he said, it's awful what goes
Oh yeah.
on.
Oh yeah.
It's awful,
Yeah.
you know.
Yeah. No. It is. I mean, as with anything, technology has a lot of benefits, but there's also drawbacks.
Well, the one thing that frustrates me is you would think if they figured out how to do it in the first place, they would have figured out how to prevent everybody else from getting it.
Crooks
they
always move faster.
Yeah, oh yeah. Well, they'll figure out. They'll
Yeah.
beat you.
Yeah. Yeah.
Yeah, no question.
And that's what you saw with the GameStop, and there's 3 or 4 other stocks that they've done the same thing with.
Yeah.
In the same time, but the GameStop is one of the most obvious ones.
Yeah.
How something can go from $20 to $500 in 2 weeks. It's
Yeah,
obvious it's being manipulated.
Yeah, yeah.
And that's that was it's a sign of the times.
Oh yeah. It's what it is.
A lot of stuff happened in the month of January. We finished up with what they call the Santa Claus rally, and that's the last 5 days of the prior year, trading days, plus the first 2 trading days of the new year. Historically, that phrase Santa Claus rally was coined back in the early 70s, and the average return has been 1.4% during that time period, and this year, right on like clockwork, well, this year it was 1.3%. So
Right
that's
there, right
good.
there.
The other effect that we have is what's known as the January effect. Basically, it says, as January goes, so goes the year. Last 4 years, January's been up. Last 4 years, the market has been up. So far this year, with a couple of days left, the Dow's up 1%. So that's another good good signal.
Yeah, and tomorrow's the last day. So
Tomorrow's the last day,
Yeah.
correct.
So if you have any kind of a day tomorrow, and it ends up again for the month,
Right.
you're up. You get back up to 31 and close out.
Pretty good.
You had another good month.
Yep.
And then we're going into February, and
Right.
we have Valentine's Day, and then the Easter Bunny's coming.
We can see, absolutely.
Yeah.
Washington, we got a new president and a new Treasury Secretary. The Treasury Secretary is somebody who's well known, Janet Yellen. She was the first woman to run the Fed. She's now the first woman to run the Treasury Department. So I think certainly with Yellen and Jerome Powell at the Fed, those are 2 people who, I think the stock market has a lot of confidence in. They're easy people to understand. They kind of talk in plain language.
Yep.
And I think that's good because that's usually not always the case in those positions. They start talking Washington lingo or economic lingo, and people misinterpret. So I think both of those are good. Another change in January was the members who vote on interest rates. We call the Federal Reserve Open Market Committee. There's 11 members. 7 of them are permanent Fed employees, but 4 of them are from the regional Fed bank presidents. And those 4 alternate every year. The new group that came in this month is slightly more in favor of keeping rates low than the group that went out. So people who think, well, now there's going to be a rise in interest rates, this new group is less inclined to raise rates as the group that was left. Our own Boston Fed president doesn't get to vote till next year, so we have to wait another year. So that's interesting. Interest rates. 3 central banks voted on interest rates in January. Our own Federal Reserve voted to keep rates unchanged, as did the European Central Bank and the Bank of Canada. So again, people are looking for higher rates.
Yeah.
There's nothing out there saying that it's imminent.
No.
Lastly, on the interest rate side, anyways, the Bank of France announced that by 2024, they are going to stop lending money to oil companies. So this whole climate change issue that Trump was not in favor of, but that Biden is in favor of, central bank in France is also going to in favor in the next few years, no longer going to lend money to oil companies.
Wow.
Oil companies will probably just reinvent themselves and go into
Something else.
renewable energy.
Oh,
or
yeah,
something
that's
like
right.
that.
Yeah.
Elon Musk became the richest person in the world.
Yeah.
Knocked out Jeff Bezos. Musk is worth $185 billion. Bezos only $184 billion.
Yeah.
And then there were two really poor people. Bill Gates, he's only at 132 billion,
Oh, that's all.
and Warren Buffett's at 86 billion.
Well, he's way down there.
Yeah,
Poor Warren. He's getting.
He's almost not in the club anymore.
Yeah, no, he's almost out.
But it's amazing, you know.
You think of Amazon,
Yeah.
the concept, and how he's built that thing. I mean, it's unbelievable.
It's everywhere.
It's everywhere.
Yep.
He's got trucks all over the place.
Oh yeah, and it's coming to our area, right?
Yeah.
They've got, was it in Northborough, and
Yeah.
they're going to build the one in Worcester.
Yep. Yeah.
I mean, it's revolutionized retail,
Well, I mean,
really.
And then I just saw yesterday that for the first time, Tesla made money.
Okay,
It's the first time
profits.
they made a profit. It
Okay.
was this year.
Yeah,
He made money on his cars. You know,
and he's into everything else.
well, he's shooting these rockets.
Yeah, he's gonna
got
send
rockets
people,
going to space.
Into space, and yeah,
Yeah.
it's amazing. You know, it really is when you think about it. So we saw those technical indicators, which say, well, the market's kind of high. If we look at this 9 segments of the stock market, that's large companies, medium-sized companies, and small companies, and then growth companies, value companies, and companies that are kind of in the middle, based on the average 20-year earnings of these companies, price to earnings ratio of these companies, they're all overvalued. The most overvalued category is the small growth companies. The least overvalued is the small value companies. But we've been on a big run. You mentioned at 6,500,
Yeah.
a few minutes ago. From 6,500 to 31,000,
Yeah.
you would kind of expect things might be
Yeah.
high.
Yeah. I mean, it's just. I mean, it's fun for us because we used to sit and say, "Gee, someday it's going to get to 20,000,"
Yep.
and poof.
Yeah. It did.
Then we'd say, "Gee, maybe it'll get to 25."
Yeah.
You know, by the end of the year.
Yeah.
Whoop, blew right by that, and you go back over that, and the bottom line is even yesterday with that down, it stayed at 30,000.
Oh yeah, it stayed over 30,000.
Yeah, it didn't go under.
Right.
And so as it grows, it sets its own base.
Right. The bottom goes.
The bottom comes up with it. Yeah.
Yep. Yep.
And you just say it. You know, when's it going to stop? You know.
Well, I think, I mean, everything ends, but it'll take higher interest rates and inflation to do that. And we're
Yeah.
going to see in a few minutes that there's nothing that would indicate that's imminent.
No, that's not even going to happen.
You know, but you're right. I remember 6,500. We kept saying, geez, when do you think you get back to 10,000?
Yeah.
Well, it's triple that
Yeah.
level. You look at your statement, you say, well, wow, I don't feel like I got that
No.
amount of money
No.
because my lifestyle hasn't changed.
Yeah.
But yeah, it really has. It could if you wanted it to.
Yeah, I mean, it's just you sit there and you say, "Whoa," you know,
Yeah.
"Wow," you know,
Yeah.
and it's you just look at it and you say, "Oh, another good month."
Yeah.
Oh, gee, isn't that too bad?
And you still have, and I still see people saying, oh, I think it's going to start to go down. Well, a lot of people are basing that all on emotions.
No, of course.
You know, well, you said that 6 times in the past, and it didn't go down. So you have to really look at facts
Yeah.
as opposed to
Well, but I mean,
emotions.
See, the problem you have is even if it goes down, it's up.
Correct. Yeah, it's not going back to where it was.
It's not going to 7 or 8 or 10 or 12.
Right.
Even if it goes down. Like, what did we down yesterday? It's almost 600 points.
600 points.
All right, and it was 30,003.
Right.
Gee, isn't that too bad?
Yeah. And so a year ago, if I told you, hey, the Dow in a year is going to be at 30,000, would you be happy? You'd be ecstatic.
Ecstatic.
Then how come you're upset that it went down 600 points?
And then today it's back.
Right. Gained it all back today.
All back.
Yeah.
You know, and so the thing is that you just say, like I said, even when it's down, it's up.
Correct. You just can't let emotions
Nope.
influence you. Then in a week and a half or so, we have the Super Bowl.
Oh yeah.
And so we have what's known as the Super Bowl factor, which states that the market tends to do better when an old NFL team wins. We don't have that case this year because Kansas City is playing Tampa Bay, and neither one is an old NFL
Oh,
team.
Kansas City is one of the original AFL
Yeah,
teams.
right.
You know,
And Tampa Bay was an expansion
that's
team
just
in
a
the 70s, I
Johnny
guess.
come lately, yeah.
Right. So we can't look at that, but that didn't stop us from trying to find some numbers to talk about. So when Kansas City wins the Super Bowl, the stock market has gained an average of 6% a year. When they've lost the Super Bowl, the stock market has gained an average 15% a year. So that's good. When Tampa Bay's only played one Super Bowl, they won it, the market was up 25%. So the better return has been with Tampa Bay.
well, see, now look, if Tampa Bay wins, that means Kansas City loses.
Right.
So when Kansas City loses, it's up 15.
Right.
And when Tampa Bay wins, it's 25.
Right.
Could we ever expect a 40% increase?
Well, although that's good, there's still one overriding
Uh-oh.
statistic that has to happen, and that's Tom Brady has to win. In the 9 Super Bowls he's played in, when he wins the Super Bowl, the market is up an average of 6%. When he loses the Super Bowl, the market loses an average of 11%.
Okay.
So we have to root for Tom Brady
And Tampa Bay.
and Tampa Bay.
Because all things point up
Correct.
with Brady and Tampa
It
Bay.
would be a good 2021.
Oh, that'd be, that's,
And although we know, hey, football doesn't influence stock prices, it's nice to have luck on it.
well, you got to have it going for you.
Correct. So we want to look at those economic things, and we really look at there's a ton of economic reports that come out every month, a quarter, but we try to look at 4 maybe more important ones to gauge to take emotions out of
Right.
your decision and your thinking. That's inflation. Well, for December, inflation rose 0.4%. Past 12 months, it's averaged 1.4%. Well, the Federal Reserve has said they're not going to touch anything on interest rates.
2.
Correct. So, okay, 1.4 to 2, there's a big gap there. They're not going to be able to
They're
raise
not going to
interest
play with
rates.
that. No.
Leading economic indicators came out today, actually, for December. There are 10 components that give you a snapshot of the economy. They were up 0.3%. That's the 7th straight monthly decline or unchange reading. So the recovery is slowing. So if the economy is slowing, very difficult to raise interest rates there.
Yeah.
Third one is jobless claims. They come out every Thursday. The latest report was 847,000. During January, we hit 900,000 for one of the weeks. That was the highest since August. So you got still a lot of people losing jobs. How do you raise interest rates?
You can't do that.
You can't. And the final one is the employment report. For December, non-farm payrolls fell by 140,000. That's the lowest number or the worst number since the recovery began.
No.
So again, how do you raise interest rates when people are losing jobs and they're not finding new ones?
They're losing them, boy, I'll tell you.
So when you look at all that, you say, well, one of the things that is crucial to stock prices is low interest rates. Well, there's no indication that rates are going up.
No.
So forget the day-to-day fluctuations. Focus on inflation and the economic indicators, and that'll be a signal when it might be time to get out, or maybe things get a little choppier. But it doesn't seem that right now.
No.
I want to take a look at February. February is not a good month. Ranks 8th of the 12, and actually since 1950, February has been a down month, a losing month. What does that mean? Doesn't mean anything other than, hey, if February the Dow drops, nothing to be excited about, right? Because the numbers would kind of hint that. In addition to that, since 2015, Februarys have alternated between down and up. If that trend continues, February of this year is going to be positive.
Yeah. Well, the thing is that we're going through a whole, look at the big box stores closing left and right.
Yep.
I mean, Bed Bath and Beyond, closing them up.
Yep.
Macy's is now closing stores.
JC
Sears is
Penney's.
gone.
Yep.
Penny's is gone.
Yep.
I mean, and so there's going to be a whole new, it's almost like a revolution.
It is.
You know, I mean, it really is. And then you look at the, I always watch the auto ads. I mean, they're giving them away.
0% financing.
Begging you to take
yeah.
them. Begging you to take them.
Yeah.
And they got inventory. I mean, I saw a thing. There's guys that still have 2019 brand new cars that are still sitting in the lot.
Wow.
You know, and they're brand new. What? They got to give it to you.
Yeah.
You know, I mean,
Yeah.
they got to get it out of there, and then that's backed up because he's got a ton of 2020s that he's got to get rid of.
Yeah.
You know, and you say, wow, you know, and I see some of these deals. You can get even you buy a used car, 1.49.
Oh yeah. Oh yeah.
1.49.
Yep.
They're giving you the car.
Yeah.
You know, I mean, I told you, we got one for Jen. No money down. We got $1,000 above for her car. No interest, 3 years.
Yeah.
0% interest. And that's Mercedes-Benz of North America. Okay.
Yeah.
So, and BMW's the same boat.
Yeah.
And Audi, all those folks, their finance companies are taking a hit because they got to sell the cars.
And it's just not autos. It's home furnishings.
We went out, we needed a dishwasher, a stove, and a refrigerator. We bought a stove and a refrigerator and a dishwasher, okay? No money down, 12 months to pay, no interest.
Yep.
Send them $50, $60 a month, paid off. All you can do is pay it off in the 11th month, and you're done.
Yeah.
So I just took the number, divided it by 11, write the check every month. Anybody wants to give me $1,500, $1,800 free,
Yeah.
thank you very much. And by the time I got home, they delivered the stuff.
There you go.
So I haven't even paid for it. It's
There you go.
sitting in my kitchen.
Yeah.
And it's there. It's there.
Yeah.
I mean, Elliot from Jordan's Furniture is always
Multi-year, nothing. Just make equal
84
monthly payments.
84 months.
Yeah.
84 months.
You won't own it in 84 months.
No, it'll be falling apart.
Yeah.
You know,
But nothing.
nothing. No.
You know.
No.
I mean, you know, of course, they always say with good credit, but that's obvious, right? They're not going to lend
I'm
money
not going to give somebody to, and in fact, I get it. I have fun, you know, and because I'll talk to somebody and I'll say, look, I'm a dream. You pray for somebody like me. Well, what do you mean, Mr. Vaughn? Well, last time I checked, I think I was 838. Really? How much do you want?
Right. We'll give you it all.
Here you go.
Right.
You know, what do you need?
Right.
You know, and I said, but it's true. And I've talked to a couple of guys that sell cars, and they said, oh, is it nice to have somebody like you come in here?
Oh, yeah.
The ones we get are the ones that their credit rating is 570,
Right.
and they want a $50,000 car.
Right.
And then the best I can do is probably get them 18%.
Right.
You know, and then they're mad at me.
Right.
You know,
So, well, I see this 0% financing.
Yeah, well,
but
yeah,
did you read all the fine print?
you don't qualify, sir.
That's where you don't qualify.
No.
Yeah.
And it's you know, it's really something else. It's just, it's amazing. And
It is.
and how well the market has really done. You know, in the last, you take the last 15 years,
Yeah.
it's just been solid.
The Trump years, the Dow averaged 12.1%.
Yep.
Now, that wasn't as good as Clinton or Obama,
No.
but for everything we went through the last 4 years, double-digit returns,
Yeah.
that's pretty good.
Very good.
Pretty good.
Very good. You know.
You know.
And it's just, and it's going to be interesting. It's going to be interesting to see how it all plays out.
Well, you know, we're still in that favorable period where,
Let's see what he can do.
right, the Republicans haven't
Yeah.
started their
Yeah. Jumping around.
attack.
Yeah.
You know, you're not blaming Republicans. Democrats did the
No,
same thing
absolutely.
when when a Republican was in the White
now
House.
the Democrats are, ha ha, we're in charge.
Right, and
So,
it'll be interesting to see what gets
Same
done
thing,
when the
yeah.
opposition comes in.
well, Michael, there we are again, another great month.
It sounds like
You
a
know,
broken record,
yeah,
but we
but-
hope it continues.
Yes, we certainly do. And there you are, folks. That's another Conversations with.